Mehraboon, it's great to have you on the show. First up really on the IT index, and since we're going to be kick-starting earnings, Infosys will be in focus. There is talk about how they will pretty much meet expectations. What is your own sense?
Well, as far as IT goes, I think I would put it this way. At this time, the expectations are very muted. Virtually anybody you talk, they are talking of, and our personal expectation is that, our house expectation is that there should be a sequential drop of around 2% in the bottom line, and a growth of around 26-27% as far as year-on-year goes. Whether one should remain invested in IT, my answer would be yes. Whether one should try and trade into Infosys ahead of the numbers, I have never encouraged people to trade just ahead of the numbers. But I personally feel there should be one frontline IT stock in investors' portfolios, because we need to understand that these companies have performed in an atmosphere or an environment, I would put it, which has been very challenging. Now, if you look at things improving as we go ahead, I think the performance of these companies, according to me, can only improve. Whether they will face pricing pressures, to some extent, it can happen. Discretionary spending, I think it can remain slightly affected in 2012-13. But going ahead, I think we are looking at Infosys delivering around 14 to 16% growth in 2012-13, and we have a target of around 3,100 to 3,200 for the stock over the next 12 months. Whether one should trade in Infosys or TCS would be the choice of an investor as far as frontline goes. But personally, I like NIIT Technologies in the mid-cap IT pack. So at the end of it all, when we are looking at this market, which itself is very challenging for investors, I think you need to identify and invest in stocks which can end up giving you 25-35% returns over the next 12 months. And I think in the mid-cap segment, I'm quite confident on NIIT Technologies. I feel it's absolutely attractive at the present levels. And the frontline, I think I would prefer to remain with an Infosys rather than a TCS. I think Infosys would just edge out TCS right now, considering the fact that TCS is much widely owned as compared to Infosys.
Just before we take that break, Mehraboon, the other big story of the day is what's happened with the coal prices and the resolutions that have come out thereof, and that's showing on Coal India as a stock as well. What do you make of all that's happened, both geographically as well as on the political front, and hence the view on Coal India?
I think the way this country is being run right now as far as the governance goes, I think the coalition politics is at force right now. I think virtually the coffers of the government were empty. They wanted to raise money. So over the last few months, I think, Neeraj, if you had asked me this question, I have absolutely told investors to stay away from any PSU stock. If you want to trade here and there, it's fine, but just stay away. If you look at what has happened to ONGC, I think the divestment took place. It's a different issue. You asked LIC of India to possibly invest in that. I'm not complaining on that particular front. What I'm trying to say is, where did that money go? It just helped the government bridge the fiscal deficit. That money coming from divestment ideally should go into development expenditure. Has it happened? Answer is no. Look at what has happened to Coal India. I'm not trying to support the management of Coal India in any way. What I'm trying to say is, ultimately you're forcing the company to sign the FSAs and ultimately end up doing all. So at the present level, people may say Coal India has got a lot of value. But looking at the government's finances right now and looking at the way decisions are being taken, I would not possibly recommend Coal India virtually at any price or any PSU for that matter. I'm completely off PSUs for the moment.
Mehraboon, what do you make of the deal on Max India?
I think this is a one-off thing as far as the stock goes. I think whether one should be buying, because I think a large part of the market is already expecting something to happen on this particular front. The stock has reacted positively, but now after having reacted so much, should one buy into it? Answer is no.
You want to take a call, 3.5%, and there's really no stopping this one despite valuations.
This is one of the possibly best stocks which we had identified somewhere around 2005 when the stock was quoting in double digits. I think this is a stock which one should not be selling at all. The fact is, it's given virtually a dream run. I think moving between 50 to 125, recollect just around 7 years ago, the way the stock has moved up over the last 3 years, the temptation is always there to go and book profit. But I've always liked this type of company, be it a TTK Prestige, be it a Page Industries, be it a stock like CRISIL. The best part of this company is they've got a super business, they've got a super cash flow, they don't have much of debt in the books, and most important, They don't believe in going with a begging bowl in front of the investors and saying, I'm coming out the rights issue, I want a placement. In short, they don't need funds, so there's no dilution. People who are holding onto the stocks continue to hold, they don't feel like selling. And people who are always wanting to buy will end up buying one fine day. So I think TTK Prestige, I wouldn't know whether it will go to 3,800 or 4,000 in a hurry, but the stock has given a dream run. It can possibly correct also the other way around. But I have always believed in this particular company. We are invested in this particular company, and I feel it makes sense to continue to hold on to this particular stock. Because the stock which you have bought at 70 or 80 rupees has gone to 3,300 rupees, be it whether it goes to 4,000 or whether it goes back to 33,000, it doesn't make too much of a difference. But one thing is there, this stock has a long way to go if you look at the business of this company and the way this sector is growing right now. So I think TTK Prestige, the fact that the stock has gone up too sharply, for a trader, I would not possibly go ahead and say go ahead and buy at the present level. But for an investor, buy at any level. I think there is money to be made in this particular stock.
Well, I agree to that, Mehraboon, but generally the belief would be that you buy distress and sell when there is excessive greed. I'm not saying that there is greed in TTK. It's probably gone up on justifiable valuations because there are a couple of reports that have come in as well. But surely, I mean, there has to be some method to madness. A Jubilant FoodWorks trading at 60, 70. There may be upgrade reports that have come in, but we've seen that happen in the past with stocks like EduComp as well, which at that point of time looked justified in trading at 50, 60, 70 multiples. You wouldn't book profits in a Jubilant, in a TTK Prestige, for example?
Well, Neeraj, I think you made a very fair point. I think when you try and identify businesses and you end up buying into stocks, the fact is you need to accept that maybe 1 out of 2 stocks will deliver with super returns, and you may fail in the other one. But at the end of it all, cumulatively if you look at it, these are the type of companies which have lovely businesses which end up giving you super returns. Now your point is, should one be in a hurry to book profit into TTK Prestige or Jubilant FoodWorks? The answer is no. The fact is, Neeraj, it's the way you look at it, it's the way the investor's mindset is. If an investor gets married to a stock, I think, well, there is no need to take money off the table. But if an investor is a person who feels, oh, at every decline I will again buy into the stock, and honestly not many do it, I think then you can continue to hold on to these companies. The stocks may be expensive, they will remain expensive. And Neeraj, if you ask me honestly, in this entire compass of maybe 3,500, 4,000 stocks listed on the market, on purely fundamentals, I think there are not more than 50 companies which any decent fundamental analyst will be able to identify for an investor to invest into. And I promise you, Jubilant FoodWorks included possibly, TTK Prestige included possibly, they will be in the list of these 50, 60 companies if somebody is really investing or wanting to buy and get married to the stocks. The fact is, yes, an EduComp type of a mishap may happen once in a way, I'm not disputing it. But look at the returns with this type of stocks have given. So if there are failures here and there, I don't think it should matter. So I always believe that 10% of your money should go into businesses of companies rather than try to look at the valuation and try to dissuade yourself, oh, this is an expensive stock. Because stocks, some of them remain expensive because they deserve to be expensive because of the businesses they are in, because of the cash flow they enjoy.